we are talking about how bad credit is affecting our community. I just wrapped up an episode recording with one of my lenders, James Addy, which you will see on the channel. You can also find it here. So let's talk about that because bad credit is never good. And it is really affecting the Black community because it is costing us money. And we know we don't like anything that costs more than it should. We never like paying more than we have to. But in some cases, we are paying more. So let's jump into this topic. First and foremost, I'm going to talk about 5 areas that you having bad credit is costing you money, or in some cases, you're just plain out being denied, and why it's important for you to work on improving your credit. I will have another episode strictly talking about how to improve credit, but today we're just going to talk about how it negatively impacts you if you have a credit score that starts with a 4 or 5. And I believe we might even be in the threes. If you have a 3, 4, or 5, you need to work on improving your credit. The goal should be to have a 7 or 8 in front of your credit score. When you have those, sky's the limit. Things open up for you. Opportunities open up for funding, for credit opportunities. So let's jump into that. So the first area that you're going to be affected is housing opportunities. And of course, I'm going to start with that because I love talking about real estate. So your housing opportunities, not only for purchasing a house, but also renting a house. Now, we all need shelter. That's one of Maslow's hierarchy. We need to have shelter. And with poor credit, not only are you not able to buy a house, but you might have challenges renting a house. So you improving your credit will help you when you're purchasing a house. Well, first of all, if you have bad credit, you might just get denied. Bad credit also will require you to have higher interest rates or potentially have to pay more money in closing costs. When you improve your credit, you qualify for better interest rates, which also helps you with your purchasing power and you buying a house. Now, if you're renting, the renting application, when you put your social security number down and a credit application is ran, one, if you have any evictions because maybe you didn't pay, that's going to negatively impact you, and most likely you might not get approved for renting. But if you have a low credit score, a lot of landlords now are requiring higher credit scores to even rent. And I know during the pandemic specifically, people were saying, like, if I need to have, such a high credit score, I might as well buy a house. And you should. And I'm not saying you should just because I'm in real estate, but owning a home really gives you a pathway to wealth building and generational wealth building. So I'm always going to be partial towards purchasing over renting. And of course, yes, you can rent because there's various reasons why you'll rent. But the goal should be to purchase something at some point in time. There's so many benefits to owning a home. So the first one is housing. Purchasing and or renting a house. The second one would be employment. Now, some people don't think about this like, oh, how does my bad credit affect employment? Well, depending on what type of job you're looking to get, if you're looking in the financial management industry or security, they're going to look at your credit report, and they should, because they don't want you to be influenced by poor credit. Also, with me, I'm a real estate broker. Now, I don't think that they look at my credit score, but they want to make sure that I'm not owing money or having public records, like a bunch of collections, poor management of funds, because I'm responsible for holding money, not only for earnest money deposits, but also paying agents. And I've heard some horror stories from agents where it can take their broker several weeks to pay. because the brokerage may not have the money. They may have spent the money somewhere else, or they're not paying the fees on behalf of the agent. They're collecting it from the agent, but they're not paying it to the franchisor. So it's important that you maintain good credit. Every time I renew my license, I also have to give a copy of my credit report. Another area that it affects you is in your loan costs and accessibility. So the accessibility part is you are limited in applying for any type of credit, or you might just be denied. Loan costs, though, from interest rates going up because of your poor credit, buying a car, uh, one person, two people, the same people, but one has a high credit score and the other one has a low credit score. You go to buy a car, one qualifies with a lower interest rate, could be 2-3%. The other one is at 8-9 or 10%. Your payments are going to be totally different. The amount that you're paying back is totally different. So at a 2% interest rate, you're paying the loan company that issued the loan, you're paying them back significantly less in interest compared to someone that's paying 10% for a car. So the type of car you can get can vary. So the two people can have the same payment. One can have a luxury car and the other one not so much, but they're paying the same thing because it was based on their credit, their credit score, and the type of interest rates they qualified for. Similar situation with buying a house. If you have a lower credit score, you're either just going to be denied or you're going to have a higher interest rate, which means that you're paying back more over time and or your monthly payment is going to be higher. Loan costs in credit cards. If you have a credit card, you might have a higher interest rate on your credit card compared to someone with a higher credit score who has a lower interest rate. So the costs for you to get credit is much higher. And in turn, it reduces your disposable income. Now, why is that important? Well, for one, you get to keep more of your money and you get to decide what you want to do with that extra money. Do you want to invest it in stocks? Do you want to, save up to buy an investment real estate property? Do you just want to add to your savings? Do you want to start a business with that extra disposable income? You get to decide what happens with your money, or maybe you just want to go on a really nice vacation with the extra money that you're saving. So that's really important. The fourth one is going to be insurance. Another one that some people don't necessarily think about is insurance, your car insurance. They look at your credit score to determine what your car insurance rate is going to be. Some people don't know that. So if you have poor credit, one, they might not even accept you as a client, or your payment might be higher. You have to understand when you have lower credit, you are more of a credit risk. It's saying the chances of you paying back the loan are lower compared to someone with a higher credit score where there's a higher probability that they're going to pay the loan on time and or pay it off. Okay. So with the insurance, your car insurance, homeowners insurance, they also look at what your credit score is. When you're buying a house, your homeowners insurance that you need to get, they also look at your credit score to determine what that payment would be. Now, with a conventional loan, there's also mortgage insurance. That payment is also based on what your credit score is. So if you have a lower credit score, that payment is going to be higher. If you have a higher credit score, preferably over 700, the payment is going to be lower. So it does affect you when you're considering insurance, and most people don't even understand that. So as you can see, you're racking up more fees and higher payments over a range of areas in your life just for having bad credit. Number 5, utilities and deposits. Now, Your gas and electric, they will pull your credit to determine if you will qualify, um, to determine if you're going to need to put a deposit down. With your cell phone, with your home phone, you might be required to pay a deposit to get these services turned on. Now, not only are you paying higher fees in other areas, now you you bought a house, you have the higher payment because you have a higher interest rate. Now, when you want to go turn on your utilities for your home, now you have to pay extra deposits just because you have a lower credit score. You can see this is like really adding up. So it's really important that you focus on having better credit. Now, in another episode, we're going to talk strictly on how you can improve your credit score. But for today, we're just talking about how it negatively impacts you when you have poor credit. Now, if you have any questions, make sure you put it down in the comment, but also make sure you like, comment, and share. Share this. This is how I can get this information out to more people so that they understand how having poor credit, having poor credit history, having too much debt, how all of these things are going to negatively impact them and impact the things that they want to do for their lives. Doesn't just impact you right now, it impacts you long term. So let's work on this together. Also, if you are thinking about purchasing a home and you would like a step-by-step guide to help you through the preparation process of being prepared to buy a house, as well as learn the contract to closing part of the purchasing of a home, get my book, How to Buy a House in 12 Months. I'm going to put a link in the comment section. Get the book. It'll also come with additional free resources to help you with paying down your debt, budgeting, a savings budgeting worksheet. It's going to come with a few things to help you, and just a worksheet that you will work alongside while you're reading the book to help you along, to help you get better in improving just your financial areas of your life, as well as credit, and just so that you can overall be a better version of yourself so that you're not paying more fees and you have more disposable income, and that you qualify for whatever it is you would like to get. Thanks for watching, and I will see you on the next episode.